How does the Federal Reserve increasing interest rates affect the housing market? So the Federal Reserve increased interest rates 75 basis points, or 3/4 of a percentage point, for the third consecutive time. Now, who the Federal Reserve is the central banking system of the United States of America. Its job is to provide safe, flexible, and stable market and financial systems. So what the Federal Reserve's job is to do is to make sure that we have a stable economy, so if there's inflation, their job is to make corrections by what they do is increasing interest rates to slow down spending so that supply and demand can get back into balance. So the Federal Reserve Chair is Jerome Powell. And he says that the Federal Reserve will continue to raise rates to help bring down record inflation. As of this week, the inflation rate is 8.3%. They're trying to get it back down to 2%. So increasing spending for households will slow down. Increasing interest rates will make money more expensive, food more expensive, student loans, personal loans. It has an indirect effect on mortgage interest rates, which makes housing prices higher, housing interest rates and payments higher. It affects car loans and credit cards. The quote that's sitting up on the screen is what the Federal Reserve Chair Jerome Powell said after the Fed met and released their report, and I'm going to read it to you. There is a big imbalance, and housing prices were going up at an unsustainably fast level. For the longer period of term, what we need is supply and demand to be better aligned so the housing prices can go up at a reasonable pace, and people can now afford homes again. The housing market has to go through a correction to get back at this place. So we had a 2-year period where housing prices continued to increase at a rapidly fast pace due to super low, historical low interest rates. Now that we have higher interest rates and housing prices have not come down as much as they should, and we still have a huge demand of buyers, interest rates are continuing to go up, which then allows for some buyers to drop out of the market. And at that point, homes are sitting on the market longer than they had been. There's still typically historic low turn times in terms of selling your house. The average time on the market as of this report is 27 days in my area in Georgia. Some parts of the country are a little longer, but prior to coronavirus or the pandemic and the historic low rates, homes were sitting on the market 60, 90, and then I remember sometimes they were sitting on the market for 4 to 6 months. So we're having a huge correction in the market. Does that necessarily mean that we're going to have the housing market is going to crash? Doesn't mean that. It just means that housing prices need to come down so our kids and their kids can afford homes. We go through cycles like this every 10 to 12 years, but because there's a housing correction doesn't mean a crash. And even if there's a recession, which we're probably at the beginning stages of the recession, and we'll see a full-blown on recession, that doesn't mean the housing market will crash. Something that is being done that no one is really discussing is they're talking about the high interest rates and they're talking about housing prices, but no one is talking about the fact that rental rates are increasing faster than the interest rates. So rental rates are going up. People are having their rents increase $300, $400, and $500 in certain markets where there's no rent control. In certain markets, they do have rent control, whether it's 5% or 10%, but there's an increase in housing affordability and living, whether it's rental or home ownership. So what does this mean to you as the buyer or the homeowner or the person who's looking for shelter? You need to decide if right now is a good time for you to purchase. By doing that, buying a house is a long-term game. It's not something where you can buy for 1 or 2 years and then hope the market corrects and you get appreciation and then you move on, rinse and repeat. When you're looking at a house, you need to look at least a 5 to 10 year period of time where you'll be in the house so you can go through the corrections and adjustments of whatever market you're in. If you buy now and housing prices are high, most likely in the next year and a half, you'll see a decline in the value of your home. That doesn't mean that you should sell your home on a fire sale. As long as you have the ability to continue to pay that mortgage on that home, you should stay in that home and allow for the appreciation to go back. What goes up must come down, and what goes down must come back up. And we will see a shift in the market so that people can now get back into homes. In terms of the interest rates increasing, in order to get that supply up and the demand down, they're going to continue to raise interest rates. Something that was said, and I can't remember who quoted it, marry the house, date the rate. You do have the ability, if you get a high interest rate now, you do have the ability to refinance at some point. I don't know if it's 2 years from now. I don't know if it's 4 years from now. But what I do know is, as a mortgage lender, if we are able to approve you for a loan, that means that you have the ability to pay for it. Do you need to make adjustments? Most likely you do. And because you qualify for $400,000 or a $500,000 house doesn't necessarily mean that you need to purchase a $400,000 or $500,000 house, because you know yourself what your budget is and your spending habits. And I would say you need to prepare for increases in utilities, food costs, gas costs, and just living costs altogether. So when you're factoring in how much house you need to buy, you should have a budget and know how much you're spending, because you don't necessarily want to be house rich and cash poor. You want to be able to have some funds set aside so that you can in fact do something in case you have an emergency. So in my opinion, I still think that this is a good market to purchase in if you have the ability and can afford to qualify. What I also will say is, while they're talking about the current interest rates being high and the housing prices, there are hedge funds and large corporations who are raising and spending millions of dollars and buying up thousands and thousands of homes all across the United States to turn into rentals. And what that's going to do is that's going to make less inventory on the market, and more people have to become renters, because these companies are buying to get cash flow so they can pay their investors back in cash flow. So with that being said, if it's good for the corporations to buy and you have the ability to purchase, I would look into purchasing now or in some time in the near future when you can afford, and make sure it's something that you can manage and sustainable for you and your family, so you'll have a place and you can begin to build a legacy. I hope this information was very helpful. If you have any questions pertaining to the housing market or what you should do, you can definitely comment below. Also, comment below if you think we're going to go into a recession and the housing market is going to crash, or you think we'll have a correction. I would love to hear your opinion, hear your feedback. I'm Kevin Jefferson, the People's Lender, NMLS number 1433853. If you thought this was definitely helpful, check out my video on the first time home buyers guide with this link below. Also, you can join my Facebook group, Homeownership Success. That link is below. And if you need more information on the home buying process, I have a free downloadable home buyers guide that you can download and read at your convenience. and check out any of my other videos that pertain to housing. Thank you and have a great day.